Prakash Diwan is joining us on the show now. Prakash, hi, good afternoon. I wanted your thoughts first on the Bajaj twins, both Bajaj Finance and Bajaj Finserv. It's been a stunning move and just no stopping it. I think in the last one and a half month, these two stocks would have moved 40 to 50%. What's your view here?
Good afternoon, Anuj. Yes, it's been stellar, absolutely stellar. And when Bajaj Finance, just before the numbers came through, we've seen how it was kind of languishing in a band, very narrow band. Didn't see much of impulse, but the numbers probably gave the market the conviction that the juggernaut is still on. The story continues to unfold with newer areas which they could kind of look at for client acquisition and value addition. So I think it's the specific business engine that they've created that's working for them, at least on the Bajaj Finance side. And Finserv is something which, very clearly when you look at the insurance businesses, the other, allied businesses that they have in the portfolio, I mean, everywhere you see technology making such a big headway in terms of market share increases. So these are stocks. And remember, the thing that's changed in the last 16 days, Anuj, is FI money coming back. And there's no way FI money can stay away from buying into these two twins. So there is definitely a lot of demand for the paper, which is resulted into this quick move that you referred to. But to me, they are expensive. So these are not stocks that you buy, in momentum. You buy them on a dull day, on a day where there's blood on the street, and for no reason or no fault of theirs, the prices would probably give you a decent entry. So they are expensive. They've always been expensive. They might continue to be expensive, but at this point, you just have to, if you hold them, you enjoy the ride, but it's not the time to buy additionally more.
Prakash, hi. So basically then to flip that on that point on its head, buy out of favor businesses, right? I mean, that's the way to make money. I mean, that's the way to invest. So where or what are those opportunities now then?
So, Prashant, the way things are looking, look at what pharma is trying to tell you. Pharma is a vast area. We have so many listed names, different business models, different phases of evolution that most of these companies are. You really can't compare and bunch them together, except for, certain large categorizations. But by and large, if you see, pharma is an area that seems to be probably seeing that kind of a money going into it, and there are certain indicators that things will start looking up. I mean, in spite of poor results, we saw how PVs reacted, responded the next day. We've seen Biocon has been out of favor, but it's kind of smartening up because of certain changes that are coming in. And the old traditionally strong names like Lupin and Sun Pharma, I think Sun Pharma has already made so much of headway. And we've had this whole thing of the US FDA inspection starting. So OAI is coming through and eventually getting resolved. Which means that, for the next few years or couple of years, at least on certain launches, you don't have any kind of an overhang. And that's something which works very much in favor of stocks. So anecdotally, pharma has done well when the intensity of US FDA inspection has been high. Post that, pharma selectively has done very well. My sense is you'll probably see that happen. So that's a pocket that's under-owned. And of course, utilities. I mean, the way Coal India has woken all of us up to the possibilities of what's happening. So look at NMDC. I mean, it went all the way to closer to 100, and things looked bad. There were no exports that were allowed. I know prices kept on crashing, but certainly things have started looking up very positively. And NMDC is probably something which could offer great value. So, dividend yield, value, all of this is kind of what you need to start fishing for. Otherwise, you're going to get caught to the momentum. The FOMO is very strong on the retail side, Prashant, I can tell you that much. So, and that's what kind of, makes me a bit cautious that when people want to start doing this closer to the all-time highs, it's difficult to kind of make money if you also buy into at the same levels, unless there's a secular bull run that is very clearly visible, to which, to me, that's not yet. So I would wait for some sort of a softness to really build in, yeah.
Well, Prakash, you said it, the FOMO factor is playing out. Earlier, it was the FOBI factor, fear of being invested. Now, everyone's, afraid of missing out on this. But what about mid-cap IT? That's suddenly come back and, some of those stocks have given you a very, very good bounce. What's your view out there? I had a brokerage today that said that Happiest Minds, its valuation very, very expensive, but they are justifying the case and they believe that it deserves such a multiple. Your view on mid-cap IT in particular?
Yeah, hi Nigel. So you're right. Some of these names, and Happiest Minds has been one of my favorites also. But when it lost ground to that 800 zones and then kind of padded up this whole recovery of 25% plus, now closer to 30%. The whole thesis is very clear. People didn't want to sell off beyond the point. I mean, they believe in the long-term story. So it's something like what happens to DMart. I mean, you don't really look at EPS and a PE multiple to justify. You don't look at EV, EBITDA, because all those metrics would actually make you get a bit quizzical about why you're buying it. But you buy that for the continuity of good business, irrespective of a couple of bad quarters that could happen, or maybe a year in between. But for the long term, the trend on digitization, on the kind of deployment that they have, the kind of client wins that they've been talking about. So all of that makes you believe that this is a business which will never go out of fashion. And IT is something where I think we still have a very good footprint and strength, and that could only grow deeper. And especially when continental Europe is suffering, and especially some of the allied countries in Eastern Europe, which were competing with us in some of the contracts. I remember Poland, Romania being very active on some of those IT services. That's also kind of getting, to be a big advantage for us. So I think IT will make a comeback, but the mid-cap IT companies which have less dependence on people is probably what's doing well right now at this point in time, where their interfaces are mature enough and all. But you look at an offbeat company like Tata Communication. I mean, I know it's not an IT company, it's not a communication company, it straddles somewhere in between, but those are opportunities where recovery will happen faster. People didn't like certain things from the last investor day, but it's recovered beautifully from there, and it has a momentum of its own. But you could stick to the larger ones. Tech Mahindra continues to be pleasantly valued now. It's not over the top. It's not undervalued as well, but I think given the visibility of 5G business that would come its way globally as well, not just India, TechM is something which could deliver very good returns from here.
Okay. By the way, just pull out the intraday chart of Shemaroo. It will be interesting to see. Shemaroo, of course, for a lot of people who won't know, was used to be one of the pioneers in the Indian movie industry. I think they still have a lot of rights, but that one's all of a sudden taken off, 13% higher on that stock. The other one which stands out right now is Hikal. That's making a big move and massive volumes on Hikal actually. Just look at that intraday chart, almost 50 lakh shares traded on Hikal. Prakash, it's a stock which has been very volatile, right? I mean, it's really all over the place. It's done well from a one-year point of view, but in between you've seen a couple of accidents as well. What's your approach for this stock now?
Anuj, yeah, it's confounding. The kind of parentage pedigree that it has, the skill set and all of that. I think it's a lot to do with the space that it is in. It has been delivered. It's been appreciated. The P multiples have come back because it's in the right spot at the right time. But fundamentally, the company is flattered to deceive so many times in the past. So now, is this going to be different? Hopefully it is, because a lot of those things from the past seem to have got obliterated in terms. I mean, they've overcome those challenges. As you said, these fires kept on happening, and there were disasters with the regulators in terms of safety aspects. So it's had its fair share of ups and downs. But I think they're in the right spot in terms of the chemistry. So if the Kalyanis and the Hiramats of the company decide to kind of put force behind actually progressing on the business, there's no reason why you would not see it start doing well. But that space has lots more to offer and promise, Anuj. So this is not a stock that I would recommend on a fresh buy. But for people who have been holding on for quite some time patiently, it's probably good tidings that seem to be coming in, and you could probably hold on. But no more fresh buying is recommended at this point in time, given the choices that I mentioned.
Okay, all right. Prakash, I wanted your view on BEML as well. We spoke to Baba Kalyani last week, and he was talking about business. And when we quizzed him about, are you interested in the asset? He said possibly so, but though there's been no progress out there. Now, tomorrow they have that demerger meet, the board meeting. What would you do with the stock at around that 1800 odd? Because post demerger, then in case there is some divestment, well, it has a bit of a clearer path. Your take?
So Nigel, this is interesting. It's just that at 1800, it's got a tad expensive. I mean, it was available, in reasonable bands of 1200 to 1500 for such a long time. But I still feel the kind of assets that they have and the kind of models, the product mix that they have, it's irreplaceable. And if you see so much of activity in terms of infrastructure, be it road, be it bridges, be it construction, housing, this is one segment of equipment that we are always under this thing, what you call equipped with. And most of these companies have started following a model of keeping a library of these assets in their core. Dilip Bilkon was the one that started off, and then some of them really kind of understood how beneficial that could be to turn around your assignments and projects quickly. So I think that's a huge market that's waiting. The government is, of course, one of the biggest spenders as well. I would definitely believe that there could be some positive outcome on the board meeting in terms of unlocking that value. But there is a lot of value. So even if you had to buy, hoping this happens over the next 18, 24 months and gets you that value, there could be a decent upside of 30-35% from here for sure.
Okay. All right. Prakash, stay with us for the time being. I think the stock has moved higher. It's up close to around 2.5% as we speak. The board meet is scheduled tomorrow. Slip into a short break. On the other side, we'll be joined by